go.
Hello and welcome to Zephyr's Adjusted for Risk podcast. We are recording on location at the beautiful Boca Raton at Wealth Management Edge Conference. You know, the ownership of wealth management has really evolved greatly over the years as financial advisors strive to build sustainable practices. Well, I have on the perfect guest today to talk about this and much, much more. But first, this episode is sponsored by the award-winning Zephyr, which helps investment professionals make more informed investment decisions. I'd like to give a very warm welcome to Jim Gold. Jim is the CEO of Steward Partners. Jim, thank you so much for coming on the podcast. It's really an honor to have you on at such a beautiful location, a great conference. Can you tell us a little bit more about yourself and Steward Partners?
Sure. So I'm one of the co-founders of the firm. I started my career, amazingly, 30 years ago next month.
Oh, wow.
At Smith
Awesome.
Barney. So I was a financial advisor, used to cold call people and ask for their money. And on Long Island, they were very happy to hear from me. Went into branch management at Smith Barney and had a terrific management career. And ultimately, left Morgan Stanley Smith Barney back in 2013 to help found Steward.
Okay.
And really, I think, wanting to be part of the new world of wealth management.
Yeah. So you really got the experience of both sides.
Yeah.
And so then you started at probably one of the very first, right at the inception of RIAs, going the independent side,
Right.
I'm saying.
Right. Yeah.
So, later today you're going to be on a panel, Hunting for Hidden Gems, How to Find and Acquire RIA Firms with Specialized Expertise. I'll tell you what, the titles that they have for these panels are fantastic. It's like I need some water
Right.
between reading
Need a decoder ring.
Yes, exactly. Can you give us just a little glimpse into the discussion without giving it away too
Yeah.
much? But
Yeah. Listen, I think everyone looks at that topic differently. And I think if you really back up a step and say, advisors have a unique process, right? How do they attract clients? Or they might have a unique expertise like, hey, I work with doctors or pilots or
Yep.
attorneys or whatever they do. Then they have a holistic, financial planning and what do they use there? What are the tools and resources? And then it comes obviously to investment management. I think when you accept that reality, I don't know that there's these hidden gems of, people doing something that's so off kilter or so different in that sense. So I think for us, we really focus on when you're looking at M&A, what is your desired outcome, right? And I know many of our folks that have joined us talk about they love the fact that at Steward, we embrace who they are, right? So
Okay.
if you're the gold group at Charles Schwab or Fidelity or wherever you are, you're now the gold group at Steward Partners.
Mm-hmm.
Right? You have models that you manage, your clients have enjoyed that for decades. We want you to continue to do that.
Okay.
So there's an embracing, I think, of who they are and how they conduct their business. And then we also facilitate really two disparate groups of what I refer to as sort of the sell and stay. So we have
Okay.
numerous multi-generational teams that are looking for us to help them with that transition process over time. And then you have some folks that say, hey, you know what, I'm in my 60s, shame on me, I haven't really thought about succession, so I'd like to monetize with Steward and have you help me figure out my succession plan. Yes, two very different paths.
Yeah, it's interesting you brought up the investments. When I started 20 years ago, it was so different. Like everything was really about investments.
Right.
And whether, financial planning, a real financial advisor wasn't really big back then.
Right.
And now it's evolved so much to now a financial advisor. It's so much more than just the investment side.
Right.
Right. And so a group like Steward can really help
Yeah.
these firms in all aspects
Right.
of it. So, the head of a very successful RIA, your leadership philosophy is rooted in collaboration, empowerment, and alignment. How has that really shaped the direction of Steward and your success building such a successful RIA in Steward?
It's interesting. I think you have to listen to your people, right? So I look at, all the different technology and tools and things we've added onto our platform. 99% of them were our advisors coming to us and saying, hey, I was at this conference, I talked to this person from XYZ company.
Yeah.
Can we look at that? Can we look at that tool? So I think we have a really strong focus on continuing to evolve the company, continuing to offer more resources to our folks. But it's not, what Jim Gold thinks is a great idea. It's what our advisors are asking for. And I think that's a different perspective than this is how we do things. You need to fit in our box.
Yeah.
We want you to tell us what the box should look like.
Okay. And that really goes along with the collaboration part, right? So they still, and you said it earlier, they still have a voice. They can still be themselves.
Yeah.
It's not like all of a sudden you got to be Steward, and Steward Partners is going to be on the front of their door.
Right. Yeah, we look at it sort of like, here's a 4,000 acre ranch. You spend time where you want to spend time.
Okay.
Like we have folks that do no alternatives. We have some folks that embrace it.
Yep.
We're about 90% RIA revenue. So we have folks that don't have insurance licenses and some folks that say, no, insurance is a key attribute of how I work with my clients for the next generation. So neither answer is bad, right? You have to give them the optionality to do what they think makes sense.
And that's fantastic that you're not looking for practices that are just focused on insurance or alternatives, a little bit of everything.
Right.
So you've got a great team working together.
Very fortunate.
We talked about a year ago, I think, about who
Yeah.
owns wealth management. Like I said, 20 years ago, what was it, the big four
Right.
or the big five?
Yeah.
And you had mentioned back then, they owned over half the wealth management revenue. Now, and it's probably changed a little bit in the year. It was 37%, those big four or five firms.
You were actually listening back then.
Yes. I actually just re-listened to it. It was like, has that changed? Or you think that 37% that the big four own, do you think that's kind of plateauing now, or do you think it's even going to shrink?
No, it's going to shrink. I mean, if you look at the Cerulli data and the projections, I think it's now 34, 35 was the last number I saw. And look, if you really think about it, you have like an elevator bank and people are, the wirehouses are going down and independence is going up. And when you see these breakaways, they're all leaving these big four, big five, firms. So there's a continued flight to independence. I think it's amazing. All the talk about M&A in RIAs, there's more RIAs at the end of every year than there are at the beginning. Despite all the M&A that happens, it's like this perpetual pond you could fish in that just keeps growing more fish. But that's really all flowing out of those same sources of that.
Right. Yeah, it's interesting. Like on wealthmanagement.com, I'm not sure I've ever read an article that talks about somebody going from independent world to a wirehouse.
We said that's like tunneling back into prison. It's like tunneling back into Shawshank prison.
Yes, exactly, right. But then with technology and groups like Steward and everything, it makes being independent. Like 20 years ago, going independent, it sounds great, but all the work and the infrastructure support isn't there. Now it is.
Right. No, the technology has totally changed the game. I mean, we're fortunate that we're an organization of size, so we can be very nimble. So we believe I talk about renting technology. We're not going to build anything. We're not coding. We're not doing any of that because the best technology today will be in a dumpster in 5 years.
Yeah.
So I want to rent it, use it, and then when the next best thing comes out, you migrate. It's like updating your phone, right? You don't want to have iPhone 1, right? Yeah. So it's the same thing here where you're in a very large organization. You can't be nimble.
Exactly.
Right? Where we can.
Yep. So you can adjust that tech stack over time.
And if something doesn't work, we take it out and put something else in.
Yep. We need to get Zephyr in that tech stack of yours and keep it in there.
Let's talk to Mohan about that.
Yes. Awesome. You talk about M&A in this space. Private equity has really become a big part of M&A. What's your thoughts on private equity getting into the M&A space and wealth management? Do you think it's going to continue to get more, wider and more involved, or?
Absolutely. I mean, and if you look at now, it's not just private equity. You're seeing sovereign funds out there investing in U.S. wealth. You're seeing Canadian pensions are now investing in U.S. wealth. So, look, you want to follow the smart money, and the smart money in private equity is following the trend we already talked about, which is independence is the future of wealth management. So if I'm a private equity firm, I have one of two choices. I can go start my own Steward Partners.
Yeah.
Good luck, because there's 100 ships at the bottom of the ocean. We're going to be the next Steward, right? Or you buy one, right?
Yeah.
So there's a I think a really strong appetite for it. I think it has a negative misnomer, which is undeserved, right? So there's plenty of terrific private equity firms out there. We have continuing very ambitious growth goals. And if you have ambitious growth goals, there's a continuing need for capital and next level resources as well.
Yeah.
You're not going to get there on your own. It's impossible.
Well, and it's interesting because wealth management is such a relationship business, right? I mean, we're here at the conference building relationships, talking about it, and it's not even within your peers, it's obviously with clients.
Yeah.
When you think of private equity, you're afraid, well, there goes all the relationships, right? They're, the gatekeepers and evil gatekeepers and stuff, but that's a misconception.
I agree. We spend a lot of time talking to all these folks, right? And it's a funny thing, and no pun intended on my last name. There's a Goldilocks dynamic of companies that years ago I would say, hey, we'd love to meet them, and they would say, yeah, like triple your firm, and they're not even going to talk to you now, right? So we're now at a size where we would deal with the most elite private equity shops, top 15 private equity shops. So we spend a lot of time getting to know these folks and the bankers, because ultimately you want to make sure that when you align with someone, they embrace what you're doing. And listen, our model's not perfect, but you have to embrace what we're doing. If you're going to come in here and make wholesale changes, you're going to destroy this company. And by the way, no one's going to get hurt more than they would, because they're putting up the capital. So you really need to find the right partner that says, I like your model. I like how you guys have structured this. We have terrific growth, a great history of doing that. And I think it's this continued evolution, which is now driven by M&A, which is something we didn't even do 2 years ago.
Yeah, and then that culture.
Yeah, culture is critical, has to be.
Especially, private, it's like you're going to, if you're coming to us, part of our culture.
Right. Yeah, it's funny, we had our national conference about a month ago, and towards the end of one of the days, I met with all of the asset management sponsors that were there to support us, terrific group of people. And at the end, one of them said to me, they said, Jim, what are you doing to your people? Because they're so happy here. Yeah. Do you guys have like Prozac in the coffee? Like, what's going on here? And I said, I'll ask you the question in reverse. They said, I go to tons of conferences, other firms. No one has a culture like Steward. I said, listen, I'll do this in reverse. The next conference you go to, ask the advisors one question. How much do you trust the management team?
Yeah.
People will literally laugh in your face when you ask that question. I said, you go in that room next door for the reception tonight, ask any of our people, they're going to say implicitly. Yeah,
it's we were talking before. I have the fantastic pleasure of having a lot of Steward people on the podcast. Yeah. Jeff and Mohan and others, and they are all fantastic. Right. So you're building a great team of a good culture. And at Zephyr too, being in Lake Tahoe, we always got compliments of our support team being so happy and good. And I often would joke, well, if you live in Lake Tahoe and not happy, then maybe there's a problem. So lastly, building a sustainable practice so people, financial advisors, can go on a week-long vacation or a month-long vacation and not worry about the practice blowing up is the ultimate goal. Do you have any tips, lastly, for financial advisors building that sustainable practice so they can have like freedom and some flexibility to their life?
So I would sort of mirror what our folks have done. So people who have run an advisory practice, right, they're not market reactive, right? They're not whipsawing and trading like crazy. Clients, many times the clients will be like, you call them quarterly, they're like, I'm fine, why are you wasting your time calling me, right? I'm in for the long run. So I think you have to build a practice that is not heavy, heavy lifting, if you will. Okay. I think you have to have a clientele that embraces how you run money and your service model and how you interact with them. Yep. It's obviously you're going to tier that. Your largest clients, maybe you meet them once a quarter, and your next clients, maybe you meet them once a year. So it's also, what are they looking for, right? So, and then you have to have a team around you. I think that's a big change from when I was in production, 30 years ago. Most advisors were sole practitioners, right? So people like to see a team around you. Yep. And in many cases, it might be, hey, I'm Jim, the lead advisor. This is my colleague who's a CFP who will do your plan for you. Yep. This is my other colleague who's our insurance specialist. So think of like a doctor's practice where you have different skills and you can't just be a general practitioner. I think the other thing is there's a generational change here in our industry that people really aren't talking about. And this comes back to succession, which is The advisor of 30 years ago who built this business, they were a hunter
Yeah.
who happened to run money after the sale.
Yep.
Today, this next generation, which is terrific, they're more farmers.
Okay.
We've established the farm now. We don't need
Yep.
hunters. We just need people. We need caretakers. We need CFPs who are accredited, who have great client relationships, who understand the market. The onus is not on them in a training program to build a book or perish. Right? They're joining an established practice. It's help us take this to the next generation. So that generational change, which is not unlike the evolution of mankind, right? We're now into the farmer generation, which I think is a good thing for the industry.
Yeah, that's really interesting you said that. And what's the biggest challenge financial advisors face? You talked about that evolution, being a farmer. What is it, the Great Wealth Transfer? Is it maybe trying to harness AI or just building organic growth? What do you think is the biggest challenge they face?
I think the challenge is, they have the same challenge we have, which is why we do it together, which is, am I stale? Am I cutting edge? Our industry is usually slow to adopt technology.
Yeah.
I mean, as crazy as this sounds, 30 years ago when I was at Smith Barney, we had no external email. That's 30 years ago. It's not 300 years ago. So the industry is slow to adopt technology, which is not a bad thing. AI is moving at light speed, obviously. I mean, from 5 years ago today, it's incredible. So I think there's always that onus of, am I cutting edge? Am I delivering my clients what they need?
Yep.
And clients' needs are changing, right? They don't want to come into a major city for an account review. They want to do it over Zoom, or they want to have you set up a call, or they want to have an app that they can look at it themselves, right? So their needs are changing, and the better advisors, they need to be at an organization, or the organization they're running has to be in front of that trade all the time.
Yeah, Mohan had a fantastic quote in a previous episode talking about, if you're not going to accept AI, you're basically going to lose. You got to accept AI and technology.
100%. Yeah.
Jim, thank you so much. Fantastic conversation. Such an honor. Where can our audience get more information about Steward?
Yeah, if you visit our website, stewardpartners.com, there's information there for advisors as well as investors. And thank you. This is terrific.
Yes.
Always good to see you.
Thank you, Jim. It was great seeing you at the conference. Looking forward to your conversation later, the panel. Thank you for listening to this episode of Zephyr's Adjusted for Risk podcast. You can watch all of our other podcasts on the Zephyr YouTube channel, as well as on Spotify. And please be sure to like, subscribe, and follow us on LinkedIn. Thank you very much, and have a great rest of your week.